What's your name?
My name is Joe. Joe Pauly. I work at Summit Funding in Modesto.
What are the requirements for a loan?
So some requirements are going to be, we look at a few different things. We look at credit, we look at income, we look at capital. Those are a few things that we look at. So let's jump into credit. So credit, we want to make sure that you don't have any outstanding liens or judgments on your credit score. Making sure nothing went to collections, that you don't owe a ton of money to someone somewhere. And we look at income to make sure that you can actually afford your mortgage payment on a month-to-month basis. And so we want to make sure that that income is also covering whatever other debts you might have. So you can be making $100,000 a year, but if you have $60,000 a year in debt, that's going to be an issue for how much you are going to get approved. So that's something that we take a look at. And then we also look at how much you might have to be able to put towards a down payment or closing costs. And there's programs such as down payment assistance that can help, especially if you're a first-time home buyer, in order to kind of offset how much capital you have to put down. So it just is something to keep an eye out. We'd like to look for a 2-year work history. It doesn't necessarily have to be at the same place, but we like to look for no gaps in employment. Sometimes there's some leniency on that if there's good documentation and reasoning for it. And it's kind of a common thing right now, considering we went through COVID and everything. So those are just a few things that we take a look at.
What programs, resources do you have?
So as far as programs, we have just about anything that anyone would need to be able to get into a home. The thing that I look at the most is if whether or not a mortgage payment makes sense for the individual and the individual's family. If it doesn't, then we might just need to find another option. And so that's why I like to look at everything on a more personal level to make sure I'm doing the right thing for them.
What's the main question a first-time home buyer asks?
Yeah, so there are a lot of different questions that first-time home buyers are going to have. You have to think about how not only is it a really exciting time for first-time home buyers because they're literally making the largest decision of their life. And that's super exciting, but at the same time, it's also very intimidating. So there's a lot of questions that they have. There's also a lot of stuff that they don't even think to ask because they just don't understand the process. Right. And that's what our job is to do, is to make that process easy and streamlined for them. The most important thing to get started is to just talk with a lender, because you can talk with an agent, but an agent is most likely just going to send you to a lender because they aren't really going to be able to do a whole lot for you until you're actually pre-approved. Right? Most agents don't really want to take someone shopping when they don't even know what the budget is. So the first thing that is most important to do is to talk with a lender and to get a budget set up. The lender is going to ask you to provide some documents such as W-2s if you're a W-2 employee, bank statements. There's a lot of things you can do to build credit. Credit cards, although you just have to be careful with credit cards. The interest rates can be atrocious at times, and that debt can be limiting to how much you might be able to get approved for. And then other options are going to be like an auto loan or something like that. Sometimes you can't get that right off the bat. Secured credit cards are great. You just have to have the capital put forward first. And another way to think about it is if you have, say you have $700 in debt that you're paying every single month, that $700 limits how much you're able to put towards a mortgage payment every month. So say instead of getting approved for $2,000 mortgage payment a month, you're only going to get approved for $1,300 because you have $700 that you're paying in debt. But if you don't have that debt, you get approved for $2,000.
What's something you can do to turn your bad credit into good credit?
Oh, that's a really good question. Sometimes people just get stuck in situations, right? People oftentimes aren't educated financially. It's not really something we learn in school or anything, right? And sometimes people just get themselves into a certain amount of debt that can seem overwhelming, right? And so when you have a large amount of debt, sometimes that drops that credit score down, right? That debt to income ratio, so to speak, which is something we look at in mortgage, can lower that credit score.
Right.
So the most important thing when it comes to how much you're spending on debt is to budget yourself. Try to figure out where every dollar's going and try to get rid of that debt if you can. Debt isn't all bad, but a lot of it can be. And this kind of, take credit cards, for instance. Credit cards, say you have a 20% interest rate, which is atrocious. Think about the interest rates you get on a car or a house even. Those interest rates will murder how long it takes for you to get out of debt. So if you are trying to build up your credit score and you have a lot of debt, get rid of that debt. It will make a huge difference for you. Sometimes just starting with the smallest payment that you have first, get that first small payment or credit card, whatever it is. Say you have a Best Buy credit card for $300. That's how much debt you got on there. Get rid of that $300. Take that monthly payment that would have been going to that, put it towards the next one. It's a Dave Ramsey method. It works. So this shows for a 30-year, a 15-year, and then an adjustable rate mortgage. 30-year and 15-year, again, fixed rate mortgages are going to be your more common types, and they show it with 0.8 of a point being paid down. A point is basically just equal to 1% of the loan amount. So you pay that point to lower your mortgage rate a little bit. Historically speaking, it's still a decent time to buy. You're still in one of the better positions.
Right.
So when people start freaking out about stuff like this, it's like, hey, the most important thing is to make sure that buying a house makes sense for you as an individual, that you and your family are comfortable with the mortgage payment, and it's still an investment. Your house is going to build equity, especially right now. Your house is going to build equity faster than this mortgage rate is going to cost you. Have you ever looked at a credit report or anything like that? So the credit report, it's I don't want to say it's simple, but the first thing that you get on a credit report is saying if there's any liens or judgments that you have. So say something went to collections or something and you haven't paid it, that's on the first page. And then after that, it will give you your scores from the three entities, right? And they'll all be different. Sometimes they'll be pretty close, sometimes they'll be a little bit far away, but they just judge things differently sometimes. And us in lending, we usually pick the middle score.
Okay.
It will tell you below the scores, it'll have a list of everything, all of the accounts that you have open, and what your monthly payment is on them. It'll have a list of accounts that are closed, and among those things, it'll show if any of them are late, how long they're late, that sort of thing.
Got it.
So, but without having to go to someone and pay for it or something, you can get a free one once a year from annualcreditreport.com. Everyone knows that the Federal Open Market Committee raised their rates, and while that increase doesn't directly affect mortgage rates, it will most likely indirectly affect it. And as we can see, mortgage rates are going up. What are we going to do? So the thing that is most important for us to look at is if whether or not your monthly payment, your approval, makes sense for you. If you're looking or interested in buying, just talk with the lender and make sure that it makes sense for you and your family. Because after all, getting into a home is the most important thing of what you're doing for your family.
Many tic-tacs later.
Okay, sounds good. Thank you. All right, bye.